Hi everyone, welcome to the channel. My name is Seagram PS if you're new here. We're looking at the business of photography and we're going to look at assets, liabilities, and property. The rich don't work for money, they work for assets. Many don't realize, especially our clients, how much capital outlay it takes to begin a photography business. At the very least, you need a camera body, not to mention a backup body, a lens or three, storage media, lighting equipment, a computer to edit your images and videos, industry software to do the post-production and the mixing. These are the absolute basics, but they can still set you back tens of thousands depending on what your budget is for gear. Just for the sake of simplicity, I'm going to say at the outset that things like cameras, lenses, and computers might be seen as assets. Most things that we buy are actually liabilities because they take revenue away from our income. Assets add to our income. If your balance sheet is just liabilities and sucking away all your income, you're going to run into financial problems really quickly. Just like any business, you need your income to be higher than that of your expenses. You ideally want more assets than liabilities. So now let's take a look at how you can in your photography business achieve a good balance of assets, liabilities, and even property. The tricky thing about us as photographers is that we like to think that our equipment is always going to be necessary and it's all going to be assets. I need all these things to make a photo shoot happen, I hear you say. And you're not wrong, but we need to be smart about these things because there's a lot of gray area that can do with some clarity. You'll need to take a good look at how your business is functioning at present. What kind of jobs do you do mostly? Do you need all the gear for each job that you do? Remember, assets make income by owning them. Liabilities cost us income by owning them. Let's take a look at then what loses value the fastest. Well, it's going to be those things that get updated models and iterations the quickest, which is generally camera body. You may buy a camera body today that was $5,000, but tomorrow a new model comes out and then suddenly that camera body that you bought is only worth $3,000 in resale value. Say you wait another technology cycle and a few more updates and now that camera body is worth even less. Other gear and equipment have a far slower depreciation curve, and I'd say this puts them maybe a little bit more into the true asset column than liability. Now, the best lenses always hold their value for a very long time because they're not very often replaced. There may be a new lens that has similar specs, but if you own a top of the line lens, it's always going to be a top of the line lens. That resale value is going to hold for far longer than a camera body ever would. Great lighting equipment, I'd also say, falls into the more asset than liability column. If you're investing in the best quality lighting gear and modifiers that you can get, those are going to hold their value for absolutely years. I'm not going to go through every list of gear item that we have, but it just helps you start thinking about how to look at things, whether they're actually an asset or a liability in your business. Now let's take this a step further. Really start sharpening our pencils for efficient business decisions. How often do you use your gear for projects and how often do they actually sit in the cupboard collecting dust? You'll need to look at your own workload and the kind of projects that you do to really answer this question. I'll give you an example of a mistake I've made in the past. When camera gimbals started coming out, they were these large two-handed rigs and they took forever to balance and ages to set up. I bought this thing and I used it a sum total of 3 times. That was a liability purchase. I outlaid all that capital for something that didn't increase my income consistently. The amount of times that I used that piece of equipment, which, don't mistake me, was necessary for that job, wasn't enough to warrant purchasing that asset. I could have saved all that money, rented one for the time I needed it, and put all that money into something else. It's often good to do this sort of hard analysis when we have a lot of gear. And I know it's sobering how many times we actually buy a piece of equipment with the grand notion of, oh, now that I own it, I can use it for all these jobs. Well, guess what? If you only shoot once a month, you're only now getting 12 uses of that gear in a year. How much would it cost you to have rented that piece of gear 12 times instead? And I can assure you the sums are probably going to add up that it was far under what you paid for that item. Now, this doesn't mean that all things you buy are actually just going to end up being liabilities. I personally keep my lenses as I consider those investment. Camera bodies I'll replace every second major technological cycle, say every 2 to 4 years. And my lighting that I bought when I started out has stayed with me because I've used it on every single job. And I would put lighting into a pure asset column because they don't depreciate much and they form part of my income stream. I use it on every single project. Now, the lower you can keep your liabilities, the stronger your assets can perform and work for you without being eaten up right out of the net. There is one asset class that you can start tapping into as a photography business, and that is property. Now, because we're talking about photography business, we're going to talk specifically about a property that is used as a studio space. I remember how excited I was when I got my first space back in the day. It was this old building with huge windows and it was just perfect for me. Now more than ever, you need to be aware if this property, with all its rates and taxes, insurance, and water and electricity bills that come along with owning a property, is this an asset or a liability? Most would jump to say that yes, owning a property, that's an asset, absolutely. If you've ever read the book Rich Dad, Poor Dad by Robert Kiyosaki, you'd know that this actually isn't always the case. Remember, assets add to your revenue income. This means that that property needs to be paying for itself and then some. Well, how do we do this? Well, you sell out. No, you don't sell the property, you sell out your studio so it can be used by other creative professionals in your city. Running a commercial studio is actually a lot more fun than you'd think. It opens up your doors literally to other creative, art directors, clients, and brands that are coming in to shoot in your commercial studio. You've now turned that property into a proper asset that is generating you income. Congratulations. If you're doing this, you're now playing in a field that not many people do. You start making your assets work for you financially. So the key points we want to take away from here is don't work for money, work to buy asset. Number 2, be ruthless with analyzing if something is a true asset or a liability. Third, don't let liabilities suck away all your revenue and your income. You're going to run yourself into the ground by doing this. And fourthly, wherever possible, make your assets work for you. Don't let them sit there and just build dust. That wraps up this episode. Click here and it'll take you to the next episode for the next topic.